Equity markets in India fell ahead of the presentation of the CPI data for the month of May in the US. There are some expectations building in that that number might be higher than previously forecast, and that was evident all throughout trade today. In fact, the Nifty 50 ended at very close to the low point of the day, 1.7% lower for the benchmark, and the Sensex dropped over 1,000 points. There was selling across the board. In fact, the broader markets also saw heavy selling. On the sectoral front, IT and financials, as well as banks and metals, were the biggest hit. The Nifty, in fact, snapped a 3-week gaining streak as over 60% of stocks in that benchmark index declined for the week. The Nifty Bank has now declined for 2 weeks in a row, while the Nifty FMCG index posted its worst week since the 8th of May. All right, let's understand where things stand right now. Let's look at the context a little more closely. The markets clearly were on tenterhooks at close today, and the Nifty managed to close just above 16,200. But we've spoken about how some sectoral indices in particular showed weakness. Let's get Jayesh Khilnani to understand what caused this fall in the markets and what the context is. Over to you, Jayesh.
There's a combination of global as well as local factors that have resulted in a big fall that we are seeing in the markets. Let me start off with the global factors, wherein the US markets actually had an accelerated fall in the last 1.5 hour of trading, and we got the Dow Jones cracking more than 600 points in the overnight session. Of course, we also have the dollar index, which has now moved back above the 103 mark, and the US 10-year yield also commanding more than 3% at the moment. So those are two important instruments that equity markets look out for in terms of the direction going forward. Coming to the domestic factors, we are seeing continued selling by the FIs on a daily basis, and on an accumulated YTD basis, they have now sold well above the $20 billion mark. The net positioning also is on the shorter side, which has reduced to about 24% as compared to more than 55% in the last couple of weeks that we have seen. Talking about the benchmark and broader market indices, the Nifty as well as the Nifty Bank are now trading well below their key moving averages of 20, 50, 100 as well as 200 days, and the small and the mid cap index have continued to outperform on a YTD basis. What's not doing well in today's trading session are two heavyweight sectors, the Nifty Metal as well as the Nifty IT index, which have taken a sharp knock on the downside.